Good morning, this is Jared with the Helton Group, and today we're going to be lending some knowledge. What's going on in the mortgage market? It's the 5th of April, and basically we've had some weird information come out. So the BLS report came out this morning. It was much stronger than anticipated, which is bad for the market. A lot of it is just kind of weird numbers. You had a lot of second jobs added, a lot of people picking up part-time jobs. It wasn't really, I mean, as you'd expect, it's not, late regular level. It also means that jobless claims wasn't really the number that they need, and I think the jobless claims or the unemployment is really what we need to maybe spur on the Feds to start reducing those interest rates, because they're taking it very slow and they've been very patient on the rate cuts. I'm not really sure that it's likely that we get inflation down to 2% this year, which is kind of their target. What's going to really have to trigger it is the unemployment rate kind of peaking up. So what does that mean? Interest rates over, the week, the last month, they've kind of, jostled around a little bit, but they're kind of flat overall. Last 2 years, much better than they were last year at different points, but still not great. And the last 5 years certainly elevated. And then we look at the loan scenario we do every time. So month over month, week over week, all the same buying power, 2818 for that, that entry level home purchase, which is down a little bit from last year at this time. Only by about $38. And then you look at home affordability, same 450 home. It only would affect like 6,000 year over year. Not that much difference. Probably people are still doing rate buy downs. You can drop down into the mid sixes in a reasonable timeline. You're breaking even a little less than 3 years. Kind of my thing on that is 24 months or less probably makes the most sense. Anything longer than that, it's unlikely you're going to keep the loan for that. And then if we go back in time, back to when the history of interest rates here, we go back and we're looking, this is 1989. So before I got into the business, we got Eternal Flame by the Bengals, and rates were 11.19%. So much higher than what they were today. But also we could all argue that home prices were, $50,000 for a very nice home. So much different. So as always, if you have any questions, please reach out. We're happy to help. Even over the weekend, just reach out anytime. Thank you very much for watching.